Warren Buffett said, if you wouldn't hold it for 10 years, you shouldn't hold it for 10 minutes. My anxiety was maximized around April, May of 2020 when we had the K-shaped recovery, and I realized that cash is trash. Everything's about to get much more expensive.
Welcome to Dream Richer. With the Fed's raising interests and inflation at an all-time high from past 5 years, what's the best strategy to not only survive but thrive in an inflationary environment? According to Saylor, the founder of Microstrategy, the answer is simple: anything that is not a currency derivative. Currency derivatives are regulated through foreign exchanges and include things like options and futures. Saylor argues that any currency derivative, or any currency for that matter, including the US dollar, is bound to see a major weakening over the next few years. This seemingly became more clearer during the pandemic, when the Feds printed the most money ever behind closed doors to keep up with stimulus checks and payments. It works like magic. With a few strokes on a computer, the Federal Reserve can create dollars out of nothing, virtually printing money and injecting it into the commercial banking system, much like an electronic deposit. By the end of the year, the Fed is projected to have purchased $3.5 trillion in government securities with these newly created dollars. If you find the video helpful, then don't forget to subscribe. Let's get right into it.
I don't really think we could do anything better to position our company in an inflationary environment than to convert our balance sheet to Bitcoin, because we basically built a balance sheet on a non-sovereign store of value that's not a currency derivative. 2 years ago, we were sitting on a bunch of cash, and that cash was losing about 10% of its purchasing power a year. And then when COVID struck and the Fed took a more accommodative monetary policy, that cash started losing 25% of its purchasing power a year. So my anxiety was maximized around April, May of 2020 when we had the K-shaped recovery, and I realized that cash is trash. Everything's about to get much more expensive, and we needed a strategy. So we adopted a Bitcoin strategy. It's driven up our stock by a factor of 5. In my opinion, it saved the company from a not very pleasant fate. The rest of the cryptos could be securities. There's just a lot of regulatory overhang and question about whether they're securities or not. And I think that the great innovation is the creation of common property in cyberspace. It took us 13 years to get to the point where that's universally acknowledged. So that makes Bitcoin the safe haven for a public investor or a public company. Everything else feels more like either venture capital or speculation. When we got to 2020, what I saw was the winning strategy is digital transformation if you have the dominant network. The losing strategy is to continue to work harder and exponentially harder for a currency growing exponentially weaker. And I had a sense of the consequences if we did nothing, because I had seen the demise of 99% of my competitors, and I could see where we were headed if we stuck with the status quo. We would have to either adopt a Bitcoin strategy or sell the company.
So about this possible winter, are you really not feeling the cold?
Look, if you're going to invest in Bitcoin, a short time horizon is 4 years, a mid-time horizon is 10 years. The right time horizon is forever. Warren Buffett said, if you wouldn't hold it for 10 years, you shouldn't hold it for 10 minutes. So if you look at the course of 4 years, no one's ever lost money over 4 years holding Bitcoin. And if you look at, our experience, we started buying it at $10,000, and now it's up by a factor of 4. So given the right time horizon, you're fine. So it's a blessing and a curse. The blessing is it makes it the most exciting, interesting thing in the financial universe everywhere in the world. And the curse is it can induce anxiety for people that have a short attention span or are focused on a narrow time horizon.
When asked about other altcoins and crypto coins besides Bitcoin, Saylor said that we could see them become securities. But unlike Bitcoin, they are not property and as such not strong assets. At a basic level, A security is a financial asset or instrument that has value and can be bought, sold, or traded. Some of the most common examples of securities include stocks, bonds, options, mutual funds, and ETF shares. Securities have certain tax implications in the United States and are under tight government regulation. In the United States, the exchange of securities is regulated by the SEC, Securities and Exchange Commission, a regulatory agency of the U.S. government.
The crypto markets are almost designed to encourage volatility, and that creates kind of a love-hate relationship between the crypto ecosystem and the Bitcoin hodlers. The Bitcoin hodlers are holding for, a decade, and sometimes for 100 years and sometimes for 1,000 years. And yet you've got fast money hedge funds that have a tax incentive, a huge amount of leverage, and massive volatility. But you have two totally different investment mentalities here. And when they come together, the result is you've got, in my opinion, the world's least risky asset to hold over the next century called Bitcoin. And you've got the world's most volatile, fast money market, called crypto. And they're both joined at the hip, for better or for worse, in the year 2022. I'd be remiss, Emily, not to make a more important point, which is what's really going on here at a macro level is inflation. The CPI headline inflation is 7%. Look at the Turkish lira. It's collapsing. The peso is collapsing. So there's a volatility story for a conventional investor in Manhattan that's got a portfolio of equities. But 75% of the world can't buy the S&P index. They're in Africa, Asia, South America, and if they've got their assets in banks, they're going to have them seized. They can't buy the equity. So the real story here is digital property that solves a problem that 8 billion people face. There's a profound shared appreciation that digital assets are the future of the financial industry, and the United States needs to lead. And I've been pretty impressed at the support in the Senate and Congress from the administration and from regulators all around the world for this entire crypto economy. And in the use case as digital property, I think that the regulatory treatment is pretty clear. If you sell it at a profit, you'll owe a capital gains on it, just like if you sold any other property. I think that with regard to the cryptocurrencies, the stable coins like Tether and Circle, they're going to be regulated as currencies. Clearly, the administration wants to see FDIC-approved and insured banks issue them. So I think that we're going to see the banking sector enter into the stablecoin market. I think that many other cryptos are deemed as securities and will be deemed as securities, and they're going to be regulated as securities. I think that the marketplace is waiting to see what those expectations will be. And then there will be a shakeout, and obviously 6,500 cryptocurrencies are not going to be around here in a decade. You're going to see many of these things go away as the industry shakes out and as it matures. Bitcoin is a decentralized network, which means that there are 100 million plus people out there that are supporters of Bitcoin. There are millions and millions of nodes. It is a swarm creature, right? It's a chain reaction in cyberspace. And once you understand that Bitcoin is a chain reaction in cyberspace, it changes your view of the asset and your view of the world and your view of the future.
It's clear from Michael Saylor's explanation that Bitcoin is here to stay. Despite the skeptics arguing that Bitcoin is too volatile and should not be invested in, Michael Saylor argues that such volatility is exactly what's needed to see higher returns. He argues that Bitcoin is only risky for those who don't have the right investing time horizon, and quoted Warren Buffett, saying, "If you are not willing to hold it for 10 years, then don't even hold it for 10 minutes. For example, if you invested in Bitcoin when it was first launched in 2009, your returns could be in the millions or billions because the initial value of the asset was $0. Say, you got into the game when a Bitcoin was 10 cents, around October 2010. If you invested $100, you'd have been able to buy about 1,000 Bitcoins. At its all-time high, those 1,000 bitcoins would have been worth more than $48 million, not accounting for compounding and assuming you bought and held the asset the entire time. Hence, having the right mindset and the right strategy is everything you need to succeed in Bitcoin and crypto. Do you agree with Mr. Saylor? To learn more about the latest crypto news, watch these videos here.